Peggy with Weichert Realtor Sachs & Clark out of Kingsport, Tennessee. I'm here talking to you today about what not to do when you're applying for a mortgage loan for a brand new home. Now, I'm assuming that you're watching this because you've already signed on the dotted line for a mortgage and you're just kind of in the dark and you don't know what to do. So let's go over the 10 commandments of what not to do when you're applying for that mortgage and waiting to hear on everything. That way we can minimize the risk of you losing the home before you've even completed the sale. Now, to commandment number 1, thou shalt not change jobs. Why not, you may ask, especially if it means a raise to help pay the mortgage loan? Because you need an income history, preferably from one employer. This establishes a stable pay history showing that you will be able to repay the loan. Most lenders want to see at least a 2-year work history and an income history for 2 years if you are self-employed. Okay, commandment number 2, thou shalt not buy a car, truck, or van unless you're planning on living in it. A car loan means monthly payments, which is likely to raise your debt to income ratio. It will also temporarily lower your credit score. Depending on your financial standing, this may not be a deal breaker. Just be aware that raising your debt to income ratio before your mortgage is approved might result in complications, like you not getting approved for the mortgage loan, so you have no home to live in. Commandment number 3, thou shalt not use your credit cards or let your payments fall behind. Again, this will affect your credit score and your debt to income ratio, causing complications for the lender and the possibility of not being approved for the mortgage loan. Also, do not close any of your credit cards since this will also temporarily lower your credit score. Number 4, thou shalt not spend the money that you have saved for your down payment. If you spend the money you have saved for your down payment, you won't be able to purchase the house. The down payment is for the house only, not for anything else you may want. Do you want to buy that house or not? Commandment number 5, thou shalt not purchase furniture or anything else before your home purchase is complete. Buying new furniture, appliances, and kids' yard stuff for a new house is exciting, but if you put anything on a credit card or withdraw a large amount of money from your bank account, the lender may not approve your mortgage. Where will you put the furniture then? Commandment number 6, thou shalt not originate any additional credit inquiries on your credit report. With everything that has already been mentioned, do I really need to go over this again? If any new inquiries are made, it may lower your credit score. The lender for your mortgage may also be concerned since it may appear you are trying to borrow more money from someone else, thus lowering your debt to income ratio and endangering your chance of home ownership. Commandment number 7, thou shalt not make any large deposits or withdrawals from your bank account. Large or irregular bank deposits, which is equivalent of 50% or more of your total monthly qualifying income for the loan, might indicate that your down payment required reserves or that closing costs are coming from an unacceptable source. A large deposit could indicate an illegal gift. A home buyer can't take help from a party who stands to gain from the transaction, like the home seller or real estate agent. If you can't prove through documentation that the source of a big deposit is acceptable under the loans program guidelines, the mortgage lender must disregard the funds and only use verifiable funds to qualify you for the home loan. So, if your parents are helping you out with the down payment, have them make out a cashier's check at the end. Don't deposit that into your bank account. Commandment number 8, thou shalt not change bank accounts. Lenders want a paper trail of your funds from the past 60 to 90 days to confirm the validity of your payments. If you decide to change bank accounts between pre-approval and closing, you will have to start the lengthy process all over again, which would delay your final approval for the mortgage loan and possibly you would lose the home you really want. If possible, avoid changing banks for 12 months prior to applying for a mortgage. Commandment number 9, thou shalt not cosign for anyone. Co-signing for someone else can impact your ability to get approved for a mortgage loan because it expands your financial obligation. The co-signed loan becomes part of your overall debt load, increasing your debt to income ratio. Even though you are not paying on that loan, you are still financially responsible for it. This could negatively impact your ability to purchase a new home. Commandment number 10, thou shalt not wire any money or any funds of any type until you confirm the source. Wire fraud is a federal crime that occurs when an electronic communication, such as email or text messaging, is used to further a criminal act, like getting you to send them your down payment money. When you are going through the process of purchasing a home, there will be numerous emails between you, the mortgage lender, and the title company. There are trolls on the internet looking for keywords to pop up, indicating that people are in the process of buying a home. With this knowledge, they will send you an email that looks perfectly fine requesting the down payment for your new home to be sent to them. If you get one of these emails, or maybe even a text, stop and don't do anything until you have verified the source of the message. Here are some ways to verify if the message is legitimate. Double check the email address. Everybody should know by now. You just hover over the email address and it tells you where it's coming from. Beware the sense of urgency. It's not super urgent if your closing is still 2 weeks away. Be aware of when you're supposed to close. The title company will request money to be wired 1 or 2 days before closing, if not the day of. You can even bring in a cashier's check for the down payment. Beware of bizarre phrasing, awkward English, poor grammatical choices, incorrect punctuation, or simply weird spacing or capitalization. This should tell you right away. It's not someone who's double checking their work. Call to confirm. And that is the biggest one right there. Call to confirm. And don't call the number in the email or the text. You call the number on your business card, you Google your title company or mortgage lender, and you use that number. Never use the contact information in the text or email you received. Wire fraud is a really big deal. I cannot stress enough how vigilant you need to be regarding this matter. There have been many people who have lost their down payment due to wire fraud and lost the home of their dreams. So, just to reiterate, if you receive any request for money via email or text, call your mortgage lender and or your title company directly to confirm. Do not wire any money until you have verbally confirmed the directions and bank account information that may have been sent. In review, when applying for a mortgage loan, make sure to follow these 10 commandments that we have gone over. Thou shalt not change jobs or become self-employed. Thou shalt not buy a car, truck, or van unless you plan on living in it. Thou shalt not use your credit cards or let your payments fall behind. Thou shalt not spend the money you have saved for your down payment. Thou shalt not buy furniture or purchase anything before your house purchase is complete. Thou shalt not originate any new inquiries on your credit report. Thou shalt not change bank accounts. Thou shalt not make any large deposits into your bank account. Thou shalt not co-sign for anyone on anything, and thou shalt not wire funds to unconfirmed sources. You can rewatch any of these videos on my YouTube channel shown below. Also, go follow my Facebook page and you'll get to see the daily listings here in Northeast Tennessee. Thanks.